All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. Starting off with the S&P 500, we had a pretty volatile week, the most volatile week we've had in quite some time here. Markets gapping down on Monday, flushing right into that 100 MA and then ultimately recapturing it. Would have been a bit of a surprise if we had closed below that without any sort of fight, considering how came from kind of an extended place here. We topped out on the 2nd of September, which coincidentally was the same day we topped out last year. It was September 2nd in 2020. But nonetheless, market's getting a little bit of a bounce here, and they got above their 50 moving average by the end of the week. And on the weekly time frame, again, nothing really wrong, closing back above your weekly 20 MA, and this has been intact the whole time, and doing it on good volume here. So structurally, the market is actually fine, except for on the daily here. And let me explain this. So I went over this Monday, and I said that there's been technical damage done to the market. And if we put our trend lines back up on here, you can see here we have higher lows really going back to March. There's really no case of a lower low being put in. You have, higher low, higher low, higher lows, higher low, and then higher low the entire way. We finally made a lower low here off of one of our major pivots. And when you do that, it does technical damage and it changes the trend. And let me explain this. So if we took a look at crude, this is something I called out. As soon as we took out this pivot here, I said, look, we finally made a lower low on crude, because crude had been in an uptrend for a long time. And we took out this pivot, and I said, crude's vulnerable to a correction. And immediately, as soon as we took that out, we got a big flush. You put in one little counter trend rally here. Notice this is a rip your face off rally, and then boom, it went down. Now crude didn't correct, too long, but nonetheless, it was in corrective mode. The same thing with Bitcoin. You guys know in one of the first videos I did here, I said as soon as Bitcoin takes out 50,000, which is this pivot here, it's vulnerable to correction. Boom, it takes it out. Rip your face off rally, and then a roll over. So what does it look like we're doing here on the spider? We took out this pivot, and now we're having a rip your face off rally here. So this type of price action is really typical, honestly, of the first leg down in a bear. Usually the first leg down in some type of a bear or correction is the weakest one. The second one is the stronger one. So just be on guard for that. I don't think the market is out of the woods yet, but at the same time, we have to respect it. It's up above the 50-day moving average. And the weekly chart, as we've just looked at, is really holding up fine. But with that said, let's just move on. Since we just brought up Bitcoin, I want to talk about this a little bit. So this is an interesting little thing here that I want to show you guys. This is how you can use the charts to see what's happening in the future. And I did a video on this yesterday, but I'll explain it again here. So you remember a few weeks ago, I was talking about this move up, and then we had this bullish pattern here. So it's consolidating sideways. And I said, if it fails, it's likely to go right back down to 40,042. And sure enough, we get this big sell off here, and then we go sideways, a little bit of an inside bar, bear flag, another flush down. And then Friday, what happens? China comes out and says, oh, we're banning crypto, this and that, regulation, etc. And this is how you can tell the charts are telling you the future. All right, so why did I say that this would go down to 40,000 if it broke down? Well, whenever you have a failure of a pattern, you usually expect a move in the opposite direction, a violent move in the opposite direction. This failure of a bullish pattern is essentially your smoke signal. It's the red flag saying something's not right. And coincidentally, Bitcoin's contract expired on Friday, and coincidentally, China just decided to come out. Why did they pick yesterday to make those comments? You have to ask yourself that question. You have to ask yourself, why did somebody apparently seemingly have great timing a week or two in advance and to know enough to dump a lot of Bitcoin before that happened? So that's just some of the shady stuff that goes on, but you can see it in the charts, and they will tell you what's going on. They'll give you those warnings. So I just wanted to point that out. I think it's a little cool thing for you guys to see. But also, since we talked about crude a minute ago, we'll go over crude too. So again, we talked about this range here on crude. We've gotten through that. You could make a case we back tested it earlier this week, and now crude pushing up. So it is into a little short-term resistance here at 74. I don't know if it gets through that right now. You did have a nice little pullback beforehand, so it could, it could have enough juice to get through it. But as of right now, I think it needs to consolidate a little bit if it wants to attack that all-time high. But ultimately, yeah, crude's held up really well. I did not think it was going to be this strong this quickly. I thought you would have to consolidate a little bit more before getting back up to that all-time high. I mean, like at least for months I was looking at, because we looked at the monthly time frame here. The resistance here is on a monthly pattern, so sometimes it takes a while for that pivot to be taken out. But crude's held up well. It doesn't mean it can't roll over, especially if the market rolls over as well. It's probably going to roll over too. But yeah, crude's just holding up really nicely here. So yeah, congrats to Energy Bulls. Speaking of, we have XLE. XLE, also pushing up as well. XOP. The OIH a little bit softer here, but ultimately benefiting from really the higher yield, and that's what's driving this right now. So, I've been talking about this for months, that I expect yields to move up later this year, and they are starting to push higher. I thought we would get one more push down first, and I still think that's possible. I still think that's in the cards. But right now, yields really pushing higher here, and they are setting up for a move. I think a pretty big move, at least probably up to 2%, at least on the 10-year. So that's something I am watching for here. Also, the Russell 2000, liking that as well. The Russell's been in a long consolidation pattern. If yields really break out and this market doesn't roll over completely, the Russell 2000 could be a sleeper play here. So the Russell's been a laggard, but Russell has a lot of regional banks, a lot of energy stocks in its composite, and with a higher yield, the Russell will benefit here. So just keep that on the radar. All right, so let's move on to gold. So again, not a whole lot to report here on gold, just kind of chopping a little bit this week. Again, not showing a lot of strength here, and whether it's manipulation or whatever, again, the higher yield's going to put pressure on gold, and so if yields break out, it's going to be hard for gold to move higher. Although I do think at some point in the next maybe 18 to 24 months, we do see a massive move on gold. However, in the somewhat near term, maybe the next 6 to 12 months, again, we talked about it. If gold does pull back further, I mean, what's it going to do? Go back to 1550? So I mean, you got this 50% retrace. You have this breakout area, 50 MA monthly. It's it's not like we're looking to trade this every day. This is a long-term, it's a holding, it's a safety play. So who cares if it goes back to 1550? That's just an area to add. And I guarantee you institutions will add at this area in a major way. So moving on here, silver, kind of same deal, although silver still holding this pivot just barely, but not liking the bounce that we're getting here off of this. This is kind of a weak bounce, to be honest. You're actually inside bar, so not the most inspiring look for silver. However, platinum, I talked about this week. I love this. This is a bottom on platinum, and we will be looking to trade this in on my Patreon, the members and I. This is a really nice bottom. Look, that's power surge, and I'll show you this level. So if we go back, actually, look at this area here on the monthly. So this is the area that you could not get above for a very long time. Resistance becomes support, pull back from an extended place, and look at that monthly candle. That's a great monthly candle. It's a great weekly candle as well. Look at that power surge, look at the volume. So that is a bottom in platinum. I'll probably be looking to trade that alongside if we get the right setup here, which I think we will. But yeah, nice move there on platinum. Nat gas also. This is one that we traded with the Patreons, made some money on Boyle, which is a 2x ETF to nat gas. Just kind of a classic drop and pop setup. So you have a blast off, you get really extended, you pull back. That first hit of the 20 is usually good support. Nice bounce off of that. So we made some money there. But nat gas still getting it's still pretty extended on the bigger time frame. So just bear that in mind. You had this big topping tail we talked about last week on nat gas. So that should be resistance. And then again, of course, the monthly is very extended, but it doesn't mean it can't go higher. When you're in an uptrend like this, until the top is proven, you have to give it the upside bias. And then uranium here did continue to pull back a little bit on URNM. So that kind of got a bid off of the 20 MA here, kind of like nat gas, but this one rolled over a bit. So this one still should have support at about 70. That could be played for even a quick bounce, but yeah, we'll have to see how it pulls back here, because it did have a really massive squeeze, and we'll just have to see how it settles out. CCJ, same kind of thing, pulling back here into this nice support area, so that should have some short-term support there. But yeah, I think that's about all I had for you this week. I just want to keep it short and sweet. I'll just quick cover volatility, so I get a lot of questions about that. Yeah, vol just got crushed this week, so it's really hard. I think it's going back down to, I talked to you guys, I didn't want to get back into it until it gets really like down to my level. And it had a nice pop here. We had a little bit of a base, and we had a nice pop this week, but they faded that really hard. And believe it or not, there's still a lot of bears in this market. Bull bear ratio actually dipped this week. We talked about it being at 50 last week, and it is now at 47. So I mean, there's even more bears in this market. But I think, if we get down to that area that I've been talking about, that sub 14, sub 15, not 14, but a lot of you guys are looking at a 1550. I think we have a good shot of getting down to 15, maybe even getting through that. Then we might look to play volatility. But as of right now, this thing just got absolutely crushed, and that's going to provide some buoyancy for the market there, at least in the near term. But anyways, guys, take care. Thanks for watching, and I will talk to you next week.